Fast casual Mediterranean restaurant chain Cava posting better than expected first quarter earnings and sales, driven in part by consumers buying more premium items. Stock down a bit, though, because I think they might have wanted you to guide even higher than you had. Brett Schulman is here, Cava's co-founder and CEO. What's going on?
Good morning. Good to be here.
What is going on, though? Because I do think there's a question. I mean, it was a great quarter. There's no question it was a great quarter. In terms, though, of how the market's reacting, just the expectation was too high? In terms of where you're going with guidance, what's going on?
Well, we think you want to look at it on a 3-year basis, given the dynamic growth of our business over the last 3 years. So when you look at it over the past 3 years, we actually grew over 41% in the quarter. And so we guided to moderate in the high 30s for the remainder of the year. Right. So we're really excited about the strength of the business in spite of all the challenges that we've seen in the industry in the first quarter.
Okay, so let's talk about those challenges and how quickly they can get resolved.
Well, certainly we'd love to see some clarity on the tariff policies. You know, the consumer is looking for certainty, but it's all the more reason why we're investing in our guests and making sure that we're putting the best value proposition for them in a time where they're feeling all that pressure all around them. And so we've underpriced inflation by 800 basis points over the last few years, when many brands have taken almost double CPI in price, really to be able to make our food accessible even when they're feeling those pressures around them.
What is the items that are killing you right now in terms of this tariff situation?
Well, we're a bit fortunate because we source most of our ingredients domestically, and then we have a lot of our produce that's covered under USMCA. We do source offshore. We get our olive oil and Kalamata olives from Greece. We do get some hormone antibiotic-free beef from Australia, but it's minimal impact, and we quantified about 20 to 40 basis points that we've incorporated in our guidance, where we maintained our restaurant-level margins of 24.8 to 25.2% for the rest of the year.
And in terms of the customer that's coming in right now, do you see any change in spending behavior?
No, we noted, and you just referred to the premium attachment. So I think it's just a testament to our everyday value proposition, where people can come, they can trade into a premium protein, those spicy lamb meatballs or our harissa honey chicken, or add our fan favorite pita chips as an attachment and still feel like they're getting a great value and it's affordable for them.
There's so many other things to discuss, but 10.8% comps in the first quarter. I thought that was still incredible. I mean, you're still relatively new, but look at the slowdown we've seen in Sweetgreen and some of the others lately. So we're trying to figure out, you know, if there's a consumer trend there, just an execution issue.
Yeah, and really proud of 7.5% traffic, which is huge. So we didn't need to rely on price to really drive those comps. And I think what you're seeing is over the past year, you've seen an increasingly selective consumer. And so then it's important to compete for those guests and win their business every day. And when they're going out and selecting to eat, they're selecting to eat at Cava.
When you look at the broader landscape, I asked you this sort of when you sat down, in terms of, I mean, you are still a new entrant in the game. Are there other new entrants in the game right now that you think we should all be focused on?
Well, we operate in the restaurant industry. There's new restaurants opening every day.
No, I know, but is there any format out there you're going, okay, this is working?
Well, I'll give a nod. You know, Ron Shaik, our chairman, I'll give a nod to one of his other concepts called Tate Bakery. So
she was talking about that in the 6 o'clock
we
hour.
were talking about this before, and I think the all-day cafe space, it's a testament to people still want to dwell, and we talk about this. It's why we're investing in what we call Project Soul. So we're investing in our dining room. We think the demise of the dining room is greatly exaggerated, that as screens and technology and automation infiltrate everyday life, and it has its place in the modern world, clearly, but it's disintermediating that human connection. And we see guests want to find reasons and places to connect.
So interesting, the human connection costs money, right?
Yeah,
That's the most expensive thing, though.
Yeah.
So what do you pay? What's an average employee getting these days?
Oh, we're north of $18, close to $20 an hour in our hourly wages.
So, I'm not arguing it's a headwind. I love that you're hiring all these folks. I'm just saying, long term, when you think about these businesses and you think about mobile ordering and everything else, the mix between how much it's a human connection versus I do it on my phone and I go.
Grab and
right?
go, yeah.
Well, we don't think it's an either or. For us, it's an and. It's great digital channels and great physical channels. And we've got a great operating model. And then we want to use technology and automation to enhance the human experience, not replace it. So we're testing generative AI and camera vision over the serving line that cross-references historical sales data, weather data, event data, and then projects to our grill cook how much chicken to be cooking in increments, or how much the team should be prepping in back of house, taking all that complexity off of their plate, allowing them to deliver that human connection and deliver great financial results.